Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.4% today. Really kind of headlined by Tesla, which dropped a little over 12%, and Apple, which dropped 3.7%, both of which seem to be dropping on what looks like a drop in their demand in total. However, you do have to keep in mind that one of the things that happens at the beginning of each year is that people will sometimes take their profits, if they're going to, at the very beginning of the year. So we generally will take losses at the end of the year so we can write those off against any gains we might have had or carry them forward. And then we generally take gains at the beginning of the year. That way, maybe we have the rest of the year, if we have some other losses, to write those off against. And so Tesla and Apple are two stocks that have had long runs through time. And even though they didn't have good years last year, a lot of people probably still have some gains. And so with a softening demand picture, if you wanted to take some profits, you're going to see that happen here at the beginning. I didn't think it was that bad of a day altogether. It actually opened up and then rallied off some lows towards the end of the day. But there was a fair amount of stocks that made money today. Amazon was up, Adobe was up, those type of things. And so really it was kind of driven by some of the bigger stocks that were on these exchanges. So when you see the S&P 500 falling and Apple's down, Apple's the biggest component of the S&P 500, and it's going to have an oversized impact on it as far as that goes. If you look closely at what's been happening since the 16th of December, really the S&P 500 has been going sideways. We've had some motion here and there, but about 3,800 range. We're currently at 3,824 and kind of that 100-point range between 3,800 and 3,900. So not a bad thing. Kind of waiting to see what's going to happen here. Let things shake out and where things might go as far as that goes. The things that we're looking forward to that we want to watch out for this year. Number one will be the debt ceiling. What happens now with a Republican-controlled House? Does that create a problem? That where the debt ceiling gets pushed around a little bit. Number two will of course be earnings, and so some earnings have already been reported. They haven't been that bad actually, with Nike and Federal Express and such at the end of the year. But the big chunk of earnings will be coming here in this first quarter. A lot of them here in January and early February. So, and what we'll be watching there for is just, do they meet expectations? Yes or no? And then when they give forward guidance, does that meet expectations or not? And so if we have companies that are missing on earnings and then saying things are going to get worse, you're probably going to see the market struggle in that environment. If on the other hand, you have a lot of companies that are meeting or beating expectations and keeping more of an upbeat outlook going forward, could see things do quite well. So it'll be interesting to see how all these companies have dealt with these situations with the potential slowing of the economy due to these higher interest rates. So that's what we're looking at. We're currently 75% invested. Could get less if things fall from here. Otherwise, we'll hang in there and see how this goes. But look forward to seeing what's going to happen tomorrow. Thank you very much.